Okay, hi everyone. Welcome to today's webinar. So for today's session, we're going to be talking about price action. We're going to give about 2 minutes to let more people join before we get started. So let me know in the chat if you guys can hear me clearly. And yeah, I'll see you guys in about 2 more minutes. Thanks everyone. Okay, okay, I think it's been 2 minutes, so let's go ahead and get started. Okay, so before we get started, as per usual, a disclaimer. Um, a risk warning: trading forex and CFDs carries a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading forex and CFDs may not be suitable for all investors. So please ensure that you fully understand the risk involved and seek independent advice if necessary. Please and ensure you understand our risk disclosure. Okay. So here's our agenda for today's price action masterclass. We're gonna start off by looking at the anatomy of a candlestick, followed by price action trading approach, the top three single candlestick patterns, top two double candlestick patterns, and top three triple candlestick patterns. Okay, so I'm Melanie and I'll be your host for today. I'm an investment analyst at Rocket, who finalist for Best FX and Equity Research in the years 2019 to 2020. We specialize in technical analysis with a focus on Fibonacci retracements, extensions, and projections. So if you guys have any questions throughout the webinar, feel free to put them into the chat and I'll be happy to go through them. Okay, so let's get started. So we're going to start off with looking at the anatomy of a candlestick. So if you take a look at our bullish candle, the top of the wick represents the high price, um, and followed by the close price. The body of the candlestick At the bottom represents an open price, and the bottom of the candle wick represents the low price. For a bearish candle, the top of the upper wick represents the high price, the start of the body of the candlestick represents the open price, the bottom of the body represents close price, and the end of the lower wick represents the low price. So it's important to understand the anatomy of a candlestick, especially when you're doing a price action strategy. Okay, so let's get started on our price action trading approach. So there are two approaches to this. One, we have the reversal, and secondly, we have the breakout. So to start off, let's take a look at kind of like a checklist or like a guide to how you can play the reversal or play the bounce. So firstly is price respecting the Ichimoku. So if price moves above the Ichimoku cloud, it is giving us a bullish signal, and if price moves below the cloud, it is a bearish signal. So is price respecting any trend line? Next, is there a key horizontal support or resistance level? Is it near any key Fibonacci levels? And which Fibonacci levels is it near to? So we have the four different Fibonacci techniques: retracement, extension, projection, and expansion. And where is the next key level that it might go to? So we use horizontal levels such as your support and resistance levels as key targets, and then you fine-tune these levels with Fibonacci. So we'll go through some of these steps during the live analysis session after I'm done with our slides. But yeah, this is kind of the guide or checklist that you can go through if you are looking to play the bounce or reversal. So if you're unfamiliar with um, any of the terms that we've used here, especially for the Fibonacci, I highly recommend you to take a look at the Forex Army's How to Draw Fibonacci Retracement. So it's just the forexarmy.com. And yeah, over here it goes through an in-depth kind of explanation as to what to look out for, especially if you're a beginner to Fibonacci. Okay, so we go through the four different techniques. We have the retracement, um, how to draw a expansion. So the negative levels, like you see over here, these are what we call Fibonacci expansion levels. And then we also have the extension, as well as projection, which uses three different points. And then we also go through how to combine Fibonacci levels so that you create Fibonacci confluence, and which is important because there is a high chance that price will tend to be attracted to these Fibonacci confluence areas. So we have a couple of examples as well, so you can go ahead and take a look at that. But I might also go through what to look out for during the live session after I'm done with my slides. Yeah, there's also some trade management. So you should always place your stop loss beyond any key levels and your take profit before any key levels. Okay. Um, so yeah, I just wanted to mention that in case you guys were new to Fibonacci and were wondering what exactly the terms were that I was mentioning earlier. Okay, so firstly we have the reversal. So we mentioned earlier we want to look out for any trends. So there are two ways to look out for trends. We have a trend line that we mentioned earlier, and we also have trend channels. So trend channels, like the one we have here, what makes a valid trend channel is if price touches at least 2 points on the top or the upper band of the channel, one here and two here, and 2 points at least on the bottom as well. Okay, so we also have um, a candlestick formation here. We have the morning star right over here. So because of that, we're expecting price to continue within this ascending trend channel. Next, we also have this horizontal level that we've highlighted. So this horizontal level is known as our pullback level because price, you can see this price has reacted off of it at the swing high, and price has actually reacted off of it here as well. Okay, making it an overlap level. So an overlap level is basically when there is a swing high and a swing low that match up in the same area. So because of that, price is more likely to return to that level. Okay. So with all of those um three points, first we have the ascending trend channel, next we have the candlestick formation, and lastly we have this horizontal level. We all can see that there is a high chance price is going to continue within this ascending trend channel. Okay, now let's look at how we can play the breakout. So firstly, we want to see if price cross below the Ichimoku cloud. Do we have the Ichimoku momentum on our side? Did price break any trend line? Did price break a recent key horizontal level? Did price break a key Fibonacci level? And then we check for the Fibonacci retracements. And then where is the next key level that it could break out to? Then we use horizontal levels as key targets and fine tune with Fibonacci. Okay, so here's an example of a breakout. So we see the resistance area to break through is this horizontal level here. So again, in this case, we actually have actually this is an overlap level as well because we have two swing highs, one over here and one here recently. And we also have a slight swing low that match up in the same area. So it's an overlap level. I'm expecting price to break through that area. You can see it happened over here. Okay. Um, another Another hint is that we have another candlestick formation here known as the three white soldiers, just in this candlestick box here. Okay, so okay, so now in this example, we see that price did indeed break above that overlap level and hit in an uptrend. Okay. Okay, now let's move on to the top three single candlestick patterns. Firstly, we have the hammer on the left and we have the hanging man, which is just the bearish version of the hammer. And for these candlesticks, we're not looking at the shape of the surrounding candlesticks, we are only looking at this single candlestick here. Okay, so we also have the inverted hammer and the shooting star. We have the dragonfly doji and the gravestone doji. Okay, so those were our top three single candlestick patterns. Now let's take a look at our top two double candlestick patterns. So firstly, we have the bullish engulfing. and beside it, the bearish engulfing. So you probably won't be able to remember all of these shapes just by looking at it once, but there are a bunch of guides online if you search up the names of these candlestick patterns um, for you to compare your charts. Okay, next we have tweezer bottoms as well as tweezer tops. So it's basically two identical candlesticks side by side. Um, okay, and our top three triple candlestick patterns, we have the morning star as well as the evening star. Okay, so we're looking at these three highlighted candlesticks in the box. Okay, so next we have the three black crows as well as the three white soldiers. And the three inside up as well as the three inside down. So again, like I mentioned, you can probably just search up the, you can take a screenshot of these images or you can just search up the names. I think different websites might use different names for these candlestick patterns, but these are very common candlestick patterns. So if you just search up common candlestick patterns, I'm sure you find some of these images for you to compare your charts to. Okay, so let's combine some candlestick patterns with what we already know. Okay, so we already know some support and resistance levels, trend lines, oscillator indicators, and momentum indicators. But let's do a bit of a recap, or if you've missed our previous sessions on support and resistance, we're just going to quickly go through that now. So firstly, we have the pullback resistance. So in this example, we have um, we have three swivels that touch the same area, the same green highlighted area. Price has broken below the green highlighted area, and we're expecting price to pull back or retrace back to that same level, which is why we're calling it resistance because we're expecting it to react above that level. Okay, same thing for a pullback support. We have three levels, or rather 3 points that line up in the same level. And they all these three swing highs all match up in this red highlighted area, giving us a resistance, swing high resistance. And once price breaks out of that swing high resistance, it becomes a pullback support because we expect price to move down and bounce off of that level again. Okay. So then we combine it with trend lines. So to recap again, what makes a valid trend line is if there are at least three touches on the trend line. So here we have one, two, and three. And in fact, for over here, at least three touches, and then it's considered a valid trend line. And channels, again, like I mentioned earlier, at least two touches at the top and two touches below. Then we combine these with resistance as well as each angle. In this example, you can see price recently broke below this support level, swing low support, and it's heading back to this level. So we call it a pullback resistance. Okay. Price is also moving below the Ichimoku cloud, so we are expecting it to reverse off this level and continue in this bearish momentum. Okay, okay, that's all for my slides. Now let me just pull up my charts really quickly. And if you guys have any questions on any questions about what we've gone through or any requests, feel free to let me know in the chat as well. Okay, so to start off, let's take a look at, yeah, where can we get a copy of the candlestick patterns? Um, I'm pretty sure that if you Google a candlestick patterns cheat sheet online, you will be able to find it for free. So I really don't think you have to buy it. Yep, so if you just Google it, there are a bunch of different candlestick patterns that you can take a look at. Um, like over here, there were a few that we mentioned from this image, this one as well, bullish, bearish patterns. Yeah, so feel free to just Google it and yeah. Baby pips is one that's really helpful, not just for the candlestick cheat sheet, but if you want to, um, if there's anything that you aren't too sure about, feel free to check out babypips.com. It's quite comprehensive, um, especially for the technical analysis parts. Yeah, no worries. Can you do an analysis for pound dollar? Yep. Let's go ahead and take a look at that. Okay. Let me just check if you guys can see my charts. Okay, should be fine. So let's get started with pound dollar. Okay, so I like to start off with the higher time frames so that we get an idea of where prices are headed towards and the general direction of price. So for pound dollar, you can see price is kind of moving upwards. Okay, it's moving in this ascending trend channel. I think we have a trend channel. Okay, yep. So again, you can see this is a valid trend channel since it has two touches at the top, right, and two touches below. Okay, and we see price kind of testing that ascending trend channel right now. Okay, so now let's take a look at our daily time frame and we'll do our analysis here. So I'm going to start off by adding our horizontal levels since we already know the general direction is in an uptrend. So I'm going to place my first resistance here and my intermediate resistance over here. And my pivot below here, and my first support perhaps over here. Okay, so now I'm looking for Fibonacci levels to support my horizontal levels. So these Fibonacci levels don't have to line up exactly in line with your horizontal levels because, like I mentioned earlier, we're looking for confluence areas, which is basically when two or more Fibonacci levels line up in the same area. So as long as it's kind of near each other, like over here, for our 78.6 and our first resistance, that's good enough. Mm, okay, I'm just gonna keep this level. Okay, now going in with another retracement. Okay, I can see my 61.8 lines up nicely with my first support. So I'm just going to keep that again. Okay, so just by looking at the charts, you can see we're expecting price to be attracted to this area here. So we're going to probably expect it to move upwards towards our first resistance. So I added this intermediate level here. I might just move it here instead. Because we have quite a few multiple swing highs here, which suggests that price tested this level multiple times, and we might see price continue to move in that direction. But it might not be able to move past it, which is why I want to place a level there so that I am aware of this level. Okay. Okay. So let's take a look at some indicators. I'm gonna use Ichimoku and MACD because at one glance, you can see exactly what the signals are. So on our MACD, you see that it's giving us a bearish signal. So I'm going to get rid of that because it doesn't support our analysis. If I zoom in really closely, you can see price kind of breaking out of the Ichimoku cloud. So this is one way that you can make use of what we recently learned about breakouts. Yeah. So if price moves below the Ichimoku cloud, it is a bearish signal. And if price moves above the Ichimoku cloud, it's a bullish signal. Okay, so we might be seeing it move above the Ichimoku cloud and giving us a bullish momentum, which lies with our analysis. Okay, so that's for pound dollar. Sure, no worries. Okay, I see we have a request for gold. Okay, same thing, I'm gonna look at gold on our higher time frame first. So on our weekly time frame, you can see again prices moving in this uptrend. Now let's see if we have any trend lines or trend channels. Okay, we have a ascending trend channel here. Okay, now on our daily time frame, Again, we see prices moving in an uptrend. Okay, so let's just go ahead and add our horizontal levels first. So my first resistance will be at the swing high, and then my pivot over here. And then my first support. So you want to try and see how far you can pull your level back so that you can see how significant that level is or how many times price has tested it in the past. Because chances are, if price tested it many times in the past, it's likely to retest that same level, like we see over here. Okay, so now that we have our horizontal levels, we go in and support those levels with our Fibonacci tools. So I'm gonna go in with a Fibonacci retracement from here to here. So we see our 61.8 lining up exactly with our first support. So I'm just gonna keep that. Okay, so we are expecting price to continue towards our first resistance. Okay, if we look at some indicators, same thing, I'm going to start with Ichimoku and MACD. Price is moving above the Ichimoku cloud, so it's giving us a bullish signal and supports our bullish analysis. And then MACD is also giving us a bullish analysis. Okay, so both support um, our analysis that price is going to continue towards our first resistance. Okay, so that's for gold. Let me see if we have any other requests. Okay, we have a request for dollar. Let's take a look. Okay, starting off with our weekly time frame again. Okay, over here we kind of see price moving um in a downtrend. Okay, even though we don't have any um trend lines or trend channels. Okay, but it does, just by looking at it, it looks like it's moving in a downtrend. Um, that's on our weekly time frame. Okay, now let's analyze this on our daily time frame. Okay, so to start off, I'm going to place my first resistance. Mm, sure. I'm going to place my first resistance a bit lower. This swing high here, I'm just going to label this as an intermediate resistance since price is really close to it. And then I'm going to label this level and see if I can pull it back even further. Okay, this is going to be my first resistance. Next, for my pivot, I'm just going to place it here at this overlap level again. Okay, we see we have some swing lows here and also some swing highs here. And lastly, for our first support, I'm just going to place it here as well. Okay. So now we're going to support these levels with our Fibonacci. So starting off with a retracement, you can see our 61.8, or rather our 78.6 lines up with our intermediate level. So even though the 61.8 lines up with our pivot, we can't use it because price has already broken out of it. So over here, I'm just going to keep my 78.6. Okay, next I'm going to be using a projection. So projection uses 3 points instead of 2. And the kind of shape that you want to look out for if you're using a projection is like a lightning bolt or like a flash kind of shape. So over here, we are using 3 levels, 61.8, 78.6, and the 100%. Okay, you can see my 100% lines up with my intermediate level, intermediate resistance, as well as the 78.6. So it makes it a confluence area. Again, you can see the 61.8 and 78.6 also line up with the first support and pivot, but price has already broken out of these levels, so we can't use it anymore. So I'm just going to keep my 100%. Okay, and over here, let's see if we have a Fibonacci extension. So for Fibonacci extension, we use 61.161.8 and 127.2. We zoom in, you can see price has already broken out of the 127.2, but it's currently approaching our 161.8, which is also in line with this confluence area here. So I'm just going to keep that. Okay. And lastly, we also have a retracement. One last retracement here. And you can see our 38.2 lines up with our first support. Okay, so we are expecting price to continue upwards. Okay, if and only if it can break out of this major confluence area here. So let's see if there is enough upward momentum from that. Firstly, we have this ascending trend line. Okay, again, what makes it valid? We have 1, 2, and 3 touches on the trend line. And then pulling out some indicators. Again, I'm using Ichimoku and MACD. You can see MACD and Ichimoku both give us a bullish signal. So they both support our bullish analysis. So we might be able to see price pushing above this confluence area here. Okay, but I would firstly place my take profit, or rather my partial take profit at this confluence area, and then my take profit at our first resistance. So that if price does reverse, I'm able to at least catch that partial profit. Okay, do you guys have any questions? Or are there any other requests? Okay, I see we have a request for AUD. Let's go ahead and look at that. Same thing on our weekly time frame. Prices are moving in a descending trend line here. Okay, on our daily time frame, um, I think we also have a descending trend line here. Okay, now going in with our support and resistance levels. My first resistance is here. Pivot, I'm just going to place it here. And as for my first support, just here. Next step is to support these levels with Fibonacci. So our 50% is lining up nicely with my first resistance. And my projection, I think we might have projection. Okay, the 78.6 lines up with my first support. Okay, and lastly, another retracement here. I think the 78.6, yeah. So the 78.6 also lines up with my pivot here. So we might be able to see price continue downwards, continuing in this descending trend line towards our first support. Okay, let me pull out some indicators again. Price looks like it's breaking out of the Ichimoku cloud, and MACD is giving us a bearish signal as well. Okay, any other questions or requests? What is the red and green shaded areas in the previous chart? Do you mean these? Or do you mean when I highlighted that area? So if you mean this is the Ichimoku cloud. So if you click on the indicators, click on Ichimoku, um, right? And then you go to settings. I like to just look at the plots. So for the plots, it gives you just a cloud. Otherwise, because there are different ways to use an Ichimoku, it's a very useful indicator. But then you would have a pretty messy chart like you see over here. So each of these lines do mean something. And I think we've gone through in depth in our Ichimoku webinar. But for the sake of having a neat chart and convenience, we found that the most useful, most effective way to use Ichimoku is actually to just look at the cloud. So that's what this is, the plot's background. If price moves above the cloud, it is bullish. If price moves below the cloud, then it is in a bearish momentum. If you're talking about the highlighted areas here, I think I did it in the previous chart. This is just meant to highlight any confluence areas. So I think in the previous chart, we had some Fibonacci levels that lined up in the same area. Then we would use this to show that there is a confluence in that area because price is more attracted to areas like that. Yeah, sure, no worries. Let's see if we have any other questions. Okay, WTI. Yeah, let's take a look at that. So on our weekly time frame, prices are kind of ranging. And on our daily time frame, it looks like price is moving in an ascending trend line. Okay, now I'm gonna go in with my Fibonacci, or rather my horizontal levels again first. This is my pivot, my first resistance. Okay, I'm just gonna label my first resistance up here instead. And my intermediate level over here. Because we have two swing highs here, and price looks like it's pretty close to it. Okay, and for our support, I'm gonna place it just below here. Okay, now going in with our Fibonacci levels again. I think you guys kind of get the steps that we went through already. So we have a 61.8 lining up with our resistance, intermediate resistance, and this 78.6 also lining up with our first resistance. So we'll just keep those. Again, even though this 50% does line up with our pivot, you have to be careful because price has already broken out of this level, so we can't use it anymore. Okay, going in with a projection, we see that 78.6 lines up. Okay, so our 78.6, there is a confluence area here, and here as well at our intermediate resistance. Okay, so we might see price continue to move towards our first resistance if price is able to break out of this confluence area here. Okay, but it does look like price is attracted to this area here. So I would place my partial profit here and then my take profit up here. Okay. Now taking a look at some indicators again, price is moving above the Ichimoku cloud, so it supports our bullish signal, and MACD is also giving us a bullish signal. Okay. Are there any questions? Okay, if there are no questions, I think that's all the time that we have for today. Thank you guys so much for joining me. I hope you guys found this helpful. And yeah, have a great rest of your week. And I'll see you guys again next week. Thanks, everyone. Bye. Bye, guys. Thank you. See you guys next week.